Hi, grade 11s. Welcome to this morning's session. We're going to be looking at the income statement. Remember, you're going to write your examination. So I'm just doing some exam preparation sessions for you so that you guys can be up to date. If you have any question, please leave your question on the comment section or any suggestion that you have. I would really appreciate that. And also don't forget to subscribe to our YouTube channel. Share this lesson with your friends, share with your classmates and anyone that you know that does accounting. So here they're saying that you are provided with information relating to Plum Store Hardware. The financial year ends on 28 February 2023 and they use perpetual inventory system. Very important for us to know that they use perpetual inventory system because there will be some transactions that will affect this. Remember, if our year ends on 28 February 2023, it means that it started on the 1st of March 2022. Very important for us to know that. Remember, the question is about 45 marks, which is around 30% of the paper, also plus minus 25% plus of the paper. So very important for you to make sure that you capitalize on questions such as income statement, and you should do this in about 36 minutes. So you need to manage your time very well. Remember, every transaction in accounting is timed. So now here they've given us the pre-adjustment trial balance. Pre-adjustment, it means that this is the adjustment that was constructed before the adjustments were taken into consideration. So some of these figures in the nominal section will need to be updated. So to avoid making this lesson very long, what I'm going to do, I'm not going to show you the part where I'll be entering these items in the income statement so that this video doesn't become very long. But in a nutshell, what I'm going to do, I'm going to enter all these accounts in their relevant places on the income statement. Remember, you guys are in grade 11. By now you are familiar and very comfortable with the structure of income statement. So that's what I'm going to do. I'm going to enter these details and then I will guide you through the transactions as we proceed with the lesson. Let's get into that. So guys, I'm here. We have already entered the information that is from the trial balance. Maybe let me write this very properly. So because it seems very big, so I'm going to rewrite our sales because I think I used a very big pen. So remember it was 1 million. Remember it is 1,797,000. Let me just confirm here. 1,797,600, and then we say minus our debtors allowance, which is 9,860. So this is the basics that you guys should know before you deal with the adjustment. So what I'm going to do, I'm going to visit the adjustments, explain, show you how to calculate, then we insert the answer immediately so that we can save time. Okay. If you have any question, remember you're more than welcome to let me know. So let's go to our first adjustment. The first adjustment says that on 27 February 2023, a debtor Elabas returned goods with a selling price. So remember, if a debtor returns goods, you've got debtors allowance with a selling price of 1,575. The business uses a markup of 75% on the cost price of goods. Remember guys, I always tell you that in this case we have to know that 4 accounts are affected. Our trading stock is affected, cost of sales is affected, debtors allowance is affected, as well as debtors control. So very important for you to make sure that when you deal with this transaction, you also remember to record on such transactions. Okay, so now what we are going to do, we need to find the selling price. In this case, remember our cost price is always 100%, our profit is 75, so it means that our selling price percentage is 175. So I'm just going to do it on a calculator. So to get our cost price, we're going to say 1,575 multiply by 100 divide by 175, which will give us 900. So in this case, it means that our cost price is equals to 900. Very important for you to remember how we calculated it. So now after doing this, we then go to our information and we record. We know that sales is going to be decreased by 1,575. So that's what we must firstly do. So we must subtract minus 1,575. Then we also keep records elsewhere. Remember, this is supposed to affect our debtors control also. So in our debtors control, we must go and check the information according to our information. Our debtors control here, according to the information, our debtors control balance is it is 35,600. So that 35,600, in that 35,600 we must also subtract 1,000, I think it's 1,575. Yes, we must also subtract 1,575. Okay, now we also need to keep records in terms of trading stock. In our trading stock, remember the trading stock from the records, which is what we are given according to our books here. This trading stock of 352,800 must also be updated. So so the trading stock of 352,800 must also subtract that 900, because we said cost of sales and trading stock will be affected. So we must also come here on our cost of sales and then subtract that 900, and then from there we will proceed with the transactions. Remember, the task control has been updated, so everything has been updated. Okay, so we need to go to the second transaction. Second transaction says that the owner F Madi took trading stock with a cost price of 1,300 for personal use. Remember, when they mention personal use, we are talking about the drawings, and then we know that on income statement we only show the impact of the impact that this transaction has on trading stock only. We don't record the drawings account. So in other words, we must also go to our drawings account, to our trading stock account, and subtract this 1,300, because the stock was taken but not recorded. So we will also subtract 1,300 here. Okay, then from there we will be done with this. We can go to the next transaction. Next transaction says that no entries have been made with regards to stock stolen on 3 February 2023. When they say no entries, it means that no records were made. Here they're saying that the insurance company has been informed, Plumstead Hardware that they have transferred 9,600 into the bank account in respect of the insurance claim. So here they've told us that they've given us 9,600, and then the last part of the transaction says that Plumstead Hardware bears 20% of the stock loss. Now remember, it means that we would have loss on insurance claim. Okay, loss on insurance claim of 20%. 600 that they gave us represent the 80% of what we got. So we must show loss on insurance claim first, and then I'll tell you what else to show. So remember, loss on insurance claim is an expense. So we're going to say loss on insurance claim. Then we are going to say 9,600, which represents the 80%. We're going to multiply it by 20 over 8. Remember, Cremora method says what you want on top, what you're given at the bottom. So let's do it quickly. 9,600 multiplied by 20 divided by 80, which is 2,400. So we are going to write that 2,400 here as our loss on insurance claim. Okay, but we must remember that this stock in its entirety, in its 100%, was lost, and this was not recorded. So we must look for the 100% as well. So we're going to say 9,600 multiplied by 100 divided by 8. It will tell us that stock to the value of 12,000 was lost but not recorded. So it means that when we go to our trading stock calculations, we'll also subtract that 12,000. Okay, and then from there, if you look at this, it has got a lot of calculations, so you must make sure that, guys, you do your things correctly. So from there, we are going to check the next transaction. What does it say to us? So the next transaction says that it speaks now about the stock that is on hand. Now, in order for you to be able to do trading stock deficit or surplus calculation correctly, what you need to do, I will advise that you then since you know that you don't have any other adjustment that will affect your records, you can close this off now, and then you compare to what they are going to tell you in the fiscal stock taking. Then it will be easy for you to tell whether there's a deficit or a surplus. Now, but here's what we need to remember. I made a mistake here. Remember that data is bringing back goods, so it's going to be a plus here, but our cost of sales will be subtracted. That's an error that I made. I apologize about that. Okay, so remember, when we do our calculation, we're going to say, you must remember at least where does each and every amount come from. So we're going to say 352,800, and then plus 900. Then you also say minus 1.3, and then you also subtract 12,000 of the lost stock. It is giving you 340,400. So you are expecting your trading stock on hand to be 340,400. Remember, this is what your records are saying, and then what we are going to get on hand, it's the actual stock that is available. So let's quickly check there. Now here they're saying on 28 February 2023, a fiscal stock count was done. It showed that the following items were on hand. Trading stock 340,740. So you see we have a problem. 340,740. So you can see that there's a shortage where there's actually a surplus. We were expecting to get 340,400. We are actually getting 340,740. So it means that we are going to have a surplus. Our hope is that at least the figure that we have in actuality should be more than the records. If it's less, it means we have a problem. Okay, now we need to show this calculation. Remember, there's the surplus here. If you say 400 minus 740, it will give you that surplus, because these two amounts are the same, so I'm not going to put it. So the difference here is 340. The surplus is 340. You must show how you got to this surplus part. So we're going to show this calculation here in the answer book. So I'm going to say trading stock surplus. So we have trading stock surplus. Now remember, we said 352,800. We also said plus 900. Plus 900. We subtracted 1,300. Let me see if I have enough space. We subtracted 1,300, and then if you remember from here, we then subtracted 12,000, and then from there we subtracted 347.40. So you also subtract 340. 340, 740. Okay, then you are done with this. But remember, guys, to try and keep your answers within this line. Unfortunately, I'm using a very big pen for you guys to be able to see and relate. So remember, the answer that you got according to that calculation was 340. So we'll automatically take that 340 to our answer book. So remember, the answer here, it was 340. So that 340, you must make sure that you transfer it immediately so that you don't lose marks. Okay, then if you look at this, you would realize that this transaction has got about 1, 2, 1. So here it will be 2 marks, 1, and then 3, 4, 5, 6, and then 7. So it's a lot, and remember, it also has got effects here. Now let's go to the next transaction and check what they're saying. We also have stationery on hand for 408. So that stationery, we are going to say subtract 480 because it was not used, and then Once you're done with that, you can proceed to the next transaction. The next transaction says that several debtors had long overdue accounts. The partners decided to write off amounts totaling to 3,425. We know that once we write off amounts, it means that we are talking about bad debts. So these people at the moment, they are included in our debtors control. So we must go and subtract them. So we'd say minus 3,425. So we'd say this minus 3,425, and then we increase our bad debts by 3,425 in the income statement. Okay, then you are done with that adjustment. Then the next adjustment says that provision for bad debts must be adjusted to 3% of outstanding bad debts. In other words, of outstanding debts. In other words, it must be 3% of your latest debtors control. So let's get that updated figure here. So I'm going to continue with this here. I'm just going to get the difference here. Okay, so if you say 35,600, you say minus 1,575, and you also say minus 3,425, and then you are left with 30,600. So the balance that we have, the outstanding balance, is 30,600. Okay, so it's 30,600. So since it's 30,600, it means that we are going to multiply by 3 over 100. Okay, so we must get that answer in writing. So if we say 30,600, I'm going to go back and try to do it on a calculator. So if we say 30,600 multiply by 3 divided by 12, it will tell us how much is our bad debt. And not 3 over 12, 3 over 100. Sorry about that. It says is 918. So it means that our new provision for bad debts balance is 918. So this is the new one, remember. Now we need to compare the old balance with the new one. So if you go to your information, they are going to give you the old balance. The next transaction, remember, it said we must adjust provision for bad debts to 3% of outstanding debts. Now when we go and check, our old provision for bad debts is 1,086. So you can check from 1,086 to here. Last year we were on 1,086. This year, this is the old. So you can see that there was a decline from here to here. There was a decline. So if you say 1,086 minus 918, it will give you 168. Okay, so you can see there's a decline, and then also when you do your calculations, you must show that there was a decline. So I'm going to show that part. Provision for bad debts adjustment will be then part of our other operating income. So I'm going to put it here. Provision for bad debts adjustment. Remember we said 1,086 minus 980. So let's check. 1,086 minus 918, it is giving us 168. So that 168, we will record it here, guys. And since we now automatically have our other operating incomes, we can just get the total to earn some marks here. So what we are going to do, we are going to say 1,342 plus 2,340, and then also plus 340, and then plus 168. It gives us 4,190. So we can put it here, 4,190, and then we end the part marks for this. Let's go to the next transaction. Remember, I said if you have any question, you're more than welcome to get in touch with us. So now the next adjustment says that the rent expense is paid 1 month in advance. So if it was paid 1 month in advance, it means it was paid for 13 months. That's the first thing you must check. Then it tells you that we must minus because we have received the rent before time. Here they're saying that the rent was increased by 10% on 1 January 2023. And oh, sorry, this is rent expense. So we've paid 1 month in advance. So you must check whether it's rent expense or income. So we generally in accounting, I don't know, maybe because we are used to rent income transactions, we generally don't check here, but this is a mistake that we should avoid doing. So remember here, we are talking about the rent expense. It means we are the one who is paying. So they are saying we paid for 1 month in advance. So if we paid for 1 month in advance, it means it's a prepaid expense, and therefore we must subtract the amount of that 1 month. Now remember, our year started in March, and then they're saying that on January it increased, so it means we paid from March to March. So if you check, it will mean that from March up until December, you paid rent as 100%. And if you check from that time, let me see where I can squeeze that calculation. So if you check from March, April, May, June, July, August, September, October, November, December, 1 2 3 4 5 6 7 8 9 10. So it is 10 months. So on this 10 months it was 100%. So if you say 100 multiplied by 10, it is going to give you 1,000. And then remember, they said the rent was increased by 10%, so which means it became 110%. So if you multiply it by 3, it's going to give you 330, and then the sum of the two will be 1,330. Now we want to know what was the rent that was prepaid for the month that was prepaid, which is March. So remember, the total rent expense amount, I think it was 59,850. So what we're going to do, we'll then say 110 divided by 1,330 multiplied by 59,850. Then it will give us the prepaid amount. Okay, so if we say 110 divided by 1,330, and then we multiply by 59,850, it gives us 4,950. So it means that the amount that we must subtract is 4,950, and then you're done with that calculation. So I'm going to subtract it here, minus 4,950. I think this was the most challenging exam for grade 11, because it has got all the tricks that learners normally struggle with. And then the next one says that on 1 January 2023, an amount of 720 was paid for the placement of an advertisement for the first 3 months. Remember, we were supposed to pay for January, February. So if they're saying the first 3 months, it means we paid up until March. So what we can do, we can just say 720 multiplied by 1 divided by 3. It will give us the prepaid amount. The prepaid amount, according to this, is 240. So that 240 must be subtracted in our answer book. So on that advertising, I'm going to say subtract 240. Okay, so we've subtracted that 240, and then the next part says the following accounts were still payable on 28 February 2023. So meaning that they were still owed. So we need to add. We know that if it's accrued, we add. Water and electricity is going to be plus 1,098. So water and electricity, it will be plus 1,098. And then for the next one, which is telephone, is plus 662. So it means it was paid for 11 months already. And then you can close this off once you are done. Okay, you can also close this off, close this off, close this off, so that you save time. Okay, and then the next transaction says that an employee, Martha, was left of the February 2023 salaries journal. His salary is as follows. They've given us net salary plus deductions, and we also need to calculate the UIF contribution. So now remember that our total expense on a person is going to be the gross salary that we pay that person, and also the contributions that we make for them. So here, if you look on this question, they've created two accounts for salaries and contributions. So we need to get the gross first. So to get the gross, we're going to take our net, which is 10,500, and we add it together with the deductions, which is 1.5. It means that the gross salary will be 12,000. So on salaries, we would say plus 12,000. And then for contributions, they mentioned something there, 1% of his gross salary. So if we say 12,000 multiplied by 1 divided by 100, it is going to give us 120. Okay, so it means that on contributions we would say plus 120 here, so we'd say plus 120, and then from there we can go to the next transaction. The next transaction says that service fees, internet banking fees, remember we regard this as bank charges, and then the interest on credit balance is interest income. Remember, our bank balance on our account that we prepare on the ledger is favorable on the debit. So on the statement, it will be favorable on the credit side. So you must also remember that. So bank charges will add these two. So I'm going to go to our bank charges. We're going to say 1,120, 1,120 plus 320, and then we get the total. So remember, 1,120 plus 320, it is giving us 1,440, and then you are done with that transaction. Let's go to, I think it's the last transaction. So here they're saying that, okay, before we do this, let's enter what was given. Provide for depreciation of 13,987. So it's given, you are just going to enter it. So we'd have our depreciation, and then according to there is 13,987. So I'm going to enter it as it is, 13,987. Remember, it's given, you don't need to calculate it. And then from there, what we need to check here, they're saying the following statement was received from Prosper Bank with regards to the fixed the fixed deposit. I think here I think there was an errata here. A fixed deposit will not tell us something about interest that is capitalized like this. Okay, so according to me here, this was a loan statement, not a fixed deposit statement. Okay, because it will really send the wrong message to say that our, and also if you check here, you can also get the information here. If you look at this, you will see we have the fixed deposit for 50,000. Okay, very interesting. Fixed deposit for 50,000, and then let's see the loan. Where is the loan? The loan is from apps. Okay, I'll just check if there's an errata on this, but if I remember well, there was a mistake with this question, so I'll just need to go back to the errata very quickly and check what was happening. Like I was saying here, it was supposed to be the loan statement, not fixed deposit. So I think maybe the person who was setting the paper took this question from somewhere and forgot to change. But also, if you go to the memo, you'll see that this was treated as a loan. So I'm going to do it exactly like that. So remember, guys, if we did not pay anything, our balance at the beginning of the year was 50,000. Interest we don't know yet, and then at the end the balance is 53,250. So it means that our interest expense would be 3,250. So to calculate our interest, we need to show how we got that. So our interest expense is going to be 53,250 minus 50,000, which will give us 3,250. And then remember, we have interest on favorable balance, so we have our interest income as, I think it was 170 or something like that. So according to here, our interest on credit balance is 170. So that 170 will come here. Now all that we have to do is to just close off our account. So we're going to start with this part here where we are closing off our trading section, okay, so that we can have the final amount. So I'm going to do it quickly. Okay, so we'll put the calculator here. So 1,797,600, we subtract 9,860, and then we subtract 1,575. It is giving us 1,786,165. So 1,786,165. Let's check if the calculation was done correctly. 1,797,600 minus 9,860 minus 1,575. It gave us 1,786,165. So if we say 1,027,200 and then we say minus 900, it is going to give us 1,026,300. So we're going to have 1,026,300 here. Then we can get our gross profit here. So let's get it. So if we say 1,786,165 minus 1,026,300, it is giving us 759,865. So we'd have 759,000. My pen disappeared. 759,865. So that 865 will come here. And then if we take the 759,865, then we add it together with 4,190. It will give us 764,055 as our gross profit. So 764,055 as our gross profit. Then from there you will realize that our operating expenses, we don't have a total, so we must calculate our operating expenses first and close them off. So let's start here. If you say 59,850 minus 4,950, you are going to be left with 54,900. And then we go to the next one, 10,800 minus 240, it is giving us 10,560. Then if we say 3,490, we minus 480, it is giving us 3,010. Then if we say 324,000, 324,000, we say plus 12,000, it is going to give us 336,000. Okay, then if we say 3,240, 3,240 plus 120, it is giving us 3,360. Then if we say we are left with few items. If we say 5,670 and then we say plus 3,425, it is going to give us 9,095. And then if we say 17,724 plus 1,098, it is going to give us 18,822. Then if we say 12,336 plus 662, it is giving us 12,998. Then we got all our operating expenses. All we need to do is to make sure that we calculate the total. So to calculate the total, we're going to say 1,990 plus 10,560, and then also plus 54,900, and then plus 10,560, and then plus 3,010, and then also plus 336,000, and then plus 3,360, and then plus 9,095, and then plus 18,822, and then also plus 12,998, and then plus 1,440, plus 2,400, and then also plus 13,987. The total that we are getting is 479,122. So I'm going to put it here, but you should calculate twice to confirm. 479,122. So this would be your total for operating expenses. From there you get your operating profit. We know it's the difference between the two. So if we say 764,055 minus 479,122, it is going to give us 284,933. So operating profit 284,933. Okay, then if we say this plus 170, it is going to give us 285,103. And then we take this profit before interest expense, then we say minus 3,250. It is giving us 281,853. So we have 281,853 as our operating profit. Now remember, like I said, you need to make sure that you are done with this in about 38 minutes. And you can see, even though I was explaining, I did it within that time. So guys, thank you so much for watching. May God richly bless you. If you want me to assist you with accounting, you're more than welcome to get in touch with me by using the details that I have provided in the description of this video. So thank you so much for watching. May God richly bless you. Shalom.